Hey guys, how's it going? My name is Daryl. Welcome back to the channel. In the last few lessons, we walked through the full algo logics and cooked the core strategy pieces. That includes the RSI Hidden Divergence, stochastic crossover, and EMA trend filter, all step by step in Python. Today, we'll bring everything together by building the mean while looped and execute the trades based on our to-go confirmations. We will also break down the trade execution functions and position sizing logics so that the strategy can run live. Let's get started. So far, we've built our strategy step by step that includes the calculations of RSI that help us to measure the momentum, and then we have the hidden divergence functions that help us to detect the spot for continuation signals. And then we also calculate the stochastic oscillators, the %K and %D, that help us to track the short-term momentum. And then we use that crossovers to help us to pinpoint the entry signals. And then finally, we calculate the trend filters to define the overall trends. And then that will help us to define the market conditions, and then we only trade with the trends. Now we are at the final pieces. That is the to-go verdict. That is the inside the while loop, inside the main loop. This is where everything continues, everything comes together inside the main loop, and then the algo decides whether or not we take the trade. Now let's copy everything that we've done so far in the previous lessons. Let's run this code. Excellent. So far, we've done what we've done is that we import all the essentials library, and then we use the initialize MT5 functions to connect the platforms to the MT5 terminal, and then execute the trade, and then we have an optional functions that help us to get the symbols based on file names, and then we have the OHLC functions that help us to capture the data, the recent data, in order for us to do the strategy. And just like what we mentioned in the last few lessons, we have the hidden divergence functions, we have the stochastic crossover functions, and then we put these two functions all together with our entire strategy. So now we just initialize the MT5. What we're going to do is that we are going to keep these things inside a while loop. The whole point here is that, just like what I mentioned, I like to run this 24 hours and 24/7. So we would like to continue to fetch the latest OHLC data, and we calculate all these indicators and signals on every update, and then we check the to-go confirmations, and if all the conditions are satisfied, of course, we will execute the trades automatically. And now we connect the MT5, and obviously we successfully connect. So now we know what we would like to achieve with our algorithm strategies, and let's walk through how we are going to implement that logically inside the main flow. Here are the main flow. I divided into 5 key steps. The first step is that we would like to pull the OHLC data from the MT5 and calculate all the indicators we need, like the RSI, the stochastic oscillator, and also the EMA filter, in order for us to confirm all these strategies that we need to indicate. And then this gives us foundations to make the informed trade decisions. And then the second thing is that we would like to capture the latest price in order for us to check for, and also we would like to check whether there is any existing positions or pending orders for the symbols we're trading. So this ensures that we don't accidentally open multiple trades at the same time with the same signal. And then the first step is that we would like to proceed checking. We would like to proceed to check the signals only if there are no open trades for that symbol. And this keeps the strategies clean and avoids conflict. And finally, just like what I mentioned in the step 7 in previous skeletons, the step 7, that is to go further inside the main view. This is the core of our strategy. We end the trades only when all these conditions are satisfied. So let's take a look on this table. For a bullish setup, the price should be above the EMA 50 and also EMA 200, and the EMA 50 has to be larger than the EMA 200. And then we check the hidden divergence, and then we use the slopes to help us to check whether or not there is a divergence happens. And then we check the stochastic percent D and percent K crossover. If the stochastic percent D falls above the percent D, then in that case, there's an entry signal. And if all these three aligns, and then there's a to-go verdict for long trade. And similarly, for a bearish setup, we would like to have the prices below these two EMA, and then the EMA 200 is larger than the EMA 50, and then we would like to check the hidden barriers. Again, we use the slopes to check whether or not they are against each other, against the trend, and then we also check the crossover in order for us to enter a short signal. And if all these three aligns, we are going to we're going to enter a short trade. In order for us to enter a trade, we definitely need to know the lot size, the stop loss, and also to the target for a full setup. So for both, if both conditions meet, no matter if the short conditions is met or the long condition is met, we need to calculate these three key informations. And finally, I just displays the live price updates in the terminals, and this just helps us to continuously confirm that the algo is running and updating correctly. And that's it, the main logic flow in a nutshell. Now let's start working on the main. Alright, the first thing that I would like to have is to get a single flow here. Okay, that is the we're using Bitcoin as an example, and then we're going to set up a while true here to keep it running for 24/7. And inside the loop, the first thing is that we would like to pull out the data. That is the function that we developed in previous lessons. And then we're going to pull out the 250 bars, enough recent data for us to calculate all the indicators, all the price indicator accurately. Then we are going to use the strategy that we developed in the previous lessons. We're going to capture the data and pass this data inside our strategy functions, and then return the data in the data frame. So just like so with this while true setup, we just continuously to capture the recent data and put it inside our string. And then the second step is that we would like to get the latest bid and last price, and also to see the current positions. So we're going to use the simple info pick function to see a symbol, and then capture the bid price. And then for this one, we capture the last price. And then the latest price is just take the mean, which is very close for us to take it as a reference. After capturing the real-time latest price, we would like to check for any existing open positions or pending orders. And so I'm going to use functions from MT5, the mean, pending order. The first function is the MT5 positions get. So we like to symbols equals to symbol. This is only one parameter. And then the second one is the MT5 dot orders get. We like to see whether or not there is any pending order. Again, just one parameter, symbol. And then we also would like to have a cooldown. Apply it true. So these two is help us to it's very important because we don't want to open multiple trades for the same signal, just like helping us to prevent the over trading. And then for the cooldown here, this is to prevent the bot from trading the same signal repeatedly. So, but for the time being, we'll just set it as a true. And then, so let's see what we've got so far. Conditions, the pending orders, and then just there's a break here. For testing purpose, later we will remove it so the bot keeps running continuously. So let's see what we got. Excellent, this is what we expect because right now we don't have any positions or pending orders. We should expect it will return to none to us because we don't have anything. To test, let's have a quick test. So just if we are going to execute trade, let's say if we're going to execute a trade, and then let's see what we have from these positions and pending order. But the time being, just ignores what we've done here. Later on, I'll show you how we do the executions. Now we should have a pending order because this is a pending order with us. So we like to bring it out so that we understand what I'm talking about. Excellent. So now you can see there's no existing position, but then we have a pending order here. So for now, what is important is to know that it returns something. Instead of none. So whenever we have an open, we have a pending orders. Similarly, if we have positions here, and if we sell positions, again, now the positions and pending orders. Okay, now you can see we have trade positions. Again, the key takeaway here is that it will return us something rather than none whenever there is positions. Now we are ready to set up the check. Let's copy what we've done so far here. And right now we are at step 3 and 4. In total, we have 4 layers of checks, and each one must pass before we execute the trade. Let's work on the short positions first. The first layer is to check the market's availability. The first things that we would like to check is that there's no positions, there's no pending orders, and the cooldowns, it's true. Just copy this. This is the first layer. This ensures that we don't overtrade or open multiple trades on the same signal. And then the second thing is the trends and signals confirmation. So we have the data short signal, that is the EMA filter. And then we use the ROC -2, -2, yeah. And then the other one is also the momentum. So the stochastic percentage positive. And this is the false over C 2. That is just the C. One important note here is that we're using the -2 rather than the -1s because the current bar is still forming. So in that case, the current bar is still incomplete. So so there will be a changing signal, changing directions. So we would like to use the last closed bar to finalize, which is finalized and also stable, in order for us to make the trading decisions. So we are going to use the -2 instead of -1. So this is the second layer, and I just type it out. This is the EMA filter, and this is the check. The third layer is the momentum confirmation. That is the RSI Hidden Divergence. And what I'm going to do here is to get the next value, the next look value here from this page. Look. I see we're using the range here, 5R. Make sure that is larger than 0, for the short seller. This is the RSI. What we are doing here is that we look back at RSI Hidden Divergence over the last several closed bar. Because the slope is a trend measure, not just a single bar signal, not just a single bar rather than not just a single bar signal. So in that case, we are looking at a few data points. Unlike what we are just looking at just one bar here. This is tell us whether or not there is a bearish momentum or a bullish momentum that is strong enough to support the trade. And the final layer is a sanity check. We also like to make sure that the current close price the latest price is larger than the close price in the previous bar, This is we compares the previous bar's close to the latest price. This ensures that we are not chasing the market, because the price is already moved too far away, and then we are going to skip the trade. And then only when all these 4 layers passes the bot executes a short trade, it's a multi-layer safety net, combining everything's combining the availability, the trends, the momentums, and the sanity check to ensure we execute the trade confidently. And once inside here, we are going to get big price for short, and for the time being, I just execute short. Oops. We do report label. Now we work it for the long. So they are actually similar, but just flipping. The first one is that we check the EMA filter. That is a long signal. And then the crossover, that is should be larger than 0. And then to take the smooth mirror. We check the hidden divergence, and then for this one, that we need to sanity check, and we like to make sure that the sanity check ensure not destroying, not changing. And then we have the sanity check, and then there is the close price. For long, the close price has to be larger than the latest price. And if all conditions satisfied, this is not clean, this is the sorry. This is the price that we are going to trade. So again, this is the price that we are going to take into the trade. And because this is long, we are going to use the ask price. We are going to execute the long, and then we're going to do a call. And again, once all four layers of check pass for a long trade, for this long trade, 1 to 3 layers, and then also this layer, 4 layers passes, and then we will set our entry price at the current ask price. And then because we're selling, so this because we're buying, so that is the price we can actually buy at right away in the market. Now we are ready to execute the order. But before we dive deeper into the code, there are 2 backgrounds which is very important. The first one is the order types. We have to understand the order types in order for us to execute the trades correctly. So let's quickly review the types of orders we are working with and how different strategy styles we use them. Let's quickly go over the different types of orders we use in our strategy. We have 3 strategies. One is the RSI, the other 2 is the ICT, and also the Hoffman strategies that we've been. And the first one is the RSI. We have the RSI trades which use the market order, that means that for a long, we use the buy, and then for a short, we use the sell. These orders execute instantly at the current market price. The reason is that the RSI signal is very time sensitive. When we spot a bullish or bearish divergence, we want to get in immediately, waiting for the trades and to make sure we miss the opportunity. So we would like to use the market order for the RSI. And then for the ICT and also for the Hoffman, for the ICT, we are using the limit orders. For long trades, we are using a buy limit, and for the short trade, we are going to use the sell limit. This just let you buy along the market or sell about it. Essentially, anticipating there is a retracement, a retrace to a key level, like the fair value gap or the block. You're preparing for price to dip or spike into the liquidity zone and then reverse in your favor. And then the final one is the Hoffman's, and that use the stop limit orders. And a long trade is the buy stop limit, and a short trade is a sell stop limit. This is essentially a hybrid approach. You wait for a breakout, which triggers a stop, and then enter and pull back to a limit price. This confirms the momentum while avoiding chasing tops or bottoms. I'm not going to go dive too deep into the details, but for the time being, I just would like to let you know for the RSI strategy, we are going to use the market order. And this table just summarizes the order types for each strategy style. So in our RSI strategy, we will use the buy and sell order. The second key information is the trade request setup that works with the MD5. This is what actually sent to the MD5 to our broker. And then the main parameters that we need are all here. That includes the actions, that is the market, orders, whether or not we are pending, we are dealing, we execute the order immediately, or we are using a pending order. So this is an actions that we need to define. That is the first parameter. And then the second parameter is the symbol, just like what kind of instruments that we are trading. And then the third one is the volume that determines the lot size. And then the type curve, that is the order types. Just like what I mentioned for RSI, we're going to use the order type to buy or order type to sell. And then we need to put a few things here for the buy that include the current price, or whether or not we are going to have the slot limit. And but that is not for the buy or sell order type. And then we also need to determine we also can provide the stop loss or the take profit price. But of course, even though you don't provide it can execute a trade. But of course, for the RSI strategies that we are going to implement, we definitely will define the stop loss and also the take profit. And then the next one is the deviations. That will allow us, there's a slippage in point, so your orders doesn't fail if the price move a little bit away from your entry point. And then we also have the magic here, which is just an ID for identifying your executions or strategy for your tracking. And then, of course, we can also leave the comments in the orders so that we can find it back later on. And then we have the type time and also the type fillings that control how long the order stay active and how long and how it's going to how it's being executed by the broker. For example, the GTC here, that is the group till cancelled. Keep the orders until disputed or manually cancelled. So essentially, these parameters define everything for your orders: what to trade, how much, when, and under what conditions. And the image on the right-hand side provides you some additional information for your reference only. And now we've covered the background and also the trade request parameters. We're ready to dive into the actual code for executing trade. We are starting by defining the functions. So it's an open trade event. And then there's some parameters that we would like to pass into this trade that include the actions, symbol, the lot, the price, the stop loss and take profit, and also the deviation. And with actions, let's set up the long first. This actions equals to buy. We are going to have trade plus, and then else if the actions equals to sell. We also have another type of trade that's and then what we're doing here is that we would like to use order sent in MD5 to pass this trade request and execute the trade. And this functions will return us results so that we can track whether or not our trade executed, and also trade request in order for us to track what we passed to this order set. Here are the few parameters that we will pass to this open trade functions. The first one is that whether or not we're going to buy or sell, that is the actions. And then the second one is the symbol, that is the trading instruments that we are going to execute. And then the lot size, the price, the execution price, and then the stop loss, take profits, distance, and also the deviations. And then the first one that let's handle the buy scenario first. We check on whether or not there's a buy here. The first parameter is the action. That is the action, and then this we use the trade action here. The second one is the symbol. That is the symbol. The third one is the volume. Lot, and then the type. That is the order type. And because this is a buy, we are using, because it's under buy scenario, we are using block buy. Then we price, which is the price here, and then the stop limit, the simply price of price, and then we have the stop loss, that is the price minus the stop loss distance, and then it's the take profit, that is the price about having the take profits distance, and then the deviations is the deviations. And then it's the two final parameter. One is the type time. We're going to use the retail cancel order. This trade is staying here for until it's being executed. And then the type filling equals the one that is the filling policy, and we are going to use the IOC, that is the immediate or cancel. Now we can handle the sell scenario. Basically, everything else is the same here. Except that what we're going to change is this into sell, and then the stop loss and take profit. One is the stop loss is above the entry price, and then the take profit is below the entry price because we're selling something. And finally, we send this order to MT5. This line actually tells the MT5 to place the trade using the parameters. Using the parameter we defined it in this trade request. And then the result will contain all the details about whether the trade, whether the order succeeded, any errors, or the trade number. And then at the end, we return the result and also the trade request. The trade request is being used for debugging, and then the result is mainly returns the response that we would like to have a track of that. Now let's try these functions. Let's run it first. Syntax error. Well, this is on the type time. Excellent. Okay, so now let's pull out a symbol. Okay, we use some example. So let's get some information from this symbol. Firstly, let's use the short scenario here. So we're going to use a bit. And just like what I mentioned before, we would like to use the ATR to control the stop loss and also the stop loss to we keep the risk ratios to 1 to 2. So here for the sell order, for these sell scenarios, we enter the current bid price because that was the price that we can actually sell at. And then we are using the ATR of the last closer bar multiplied by 2 as our stop loss distance. This adapts to current market volatility using the ATR. So if the market is moving a lot, the stop loss automatically scales wider. And then similarly, we are using the ATR to set up our take profit. And this is times 4, that's another multiplier, which gives us roughly a 2 to 1 risk to rewards to risk ratio. And this multiplier can be adjusted, and it depends on our strategy needs. And then we define the lot. Here we just define it by 0.5 for the time being. But in the future, we definitely can calculate it dynamically based on our risk in dollar amount. And finally, let's call these functions to open the trade. The field parameter we would like to return the results and also let's here open trade. The first thing is we're going to sell, so we're going to sell it. And we got a symbol. There's a symbol. We have the lot. We have the lot. We have the price. That was a big price. We have the price here. And then we have the stop loss. We have the take profit. And then the deviations, we set it to 0, meaning there's no slippage tolerance for this test. And then that should work. Let's print the result after our executions. And result here, so you can see that the orders has already executed. Just like what I mentioned, we have this volume size, we have the current price, means this request executed, and then let's take a look on symbols. I'd like to take a look on the stop loss and also the take profit, and you can see here they use our ATL only to select the stop loss and take profit target. And of course, if you open your MT5, you should be able to see there's a trade being executed as well. So let's try to use it's better to use a demo account for testing. Excellent. Now the next thing we need to work is the lot sizing. So instead of giving a fixed number lot here, I prefer to define how much US dollar I'm willing to risk on the trade, and then calculate the lot accordingly, backward engineering, and then reverse engineering. So this way, the position size adapts to the market, and then the stop loss distance. First, we define a function here for a positions sizing to calculate the lot. First things that I would like to get is the amplified information. So retrieve some information from the symbol first, and then we would like to have the tick value. This tick value determines how much price move per ticket. So tick value, and we would like to know the tick size. It's the info the trade tick size. And then we need to do a little bit of the normalizations because different instruments have different ticket size. And then finally, we would like to return the tick value divided by the size and normalize it by the tick size. And then this tells us how much USD per price movement per lot. This is what the position sizing means. And then now we can calculate the risk per lot returns regarding the stop loss distance. So we do have the risk per lot equals to stop loss multiplied by this US dollar per price per lot. And then finally, we would like to calculate the lot. Say here we would like to take $100 for this risk, and just divide it by the risk and lot, and that will return the lot size. The required was to having $100 risk. Let's print this value and see what we have. There's a typo, so takes us. Excellent. So that's for the bitcoins here. We have the one. We have one here. That means that is a $1 per price movement a lot. And then based on the stop loss that we calculated before, based on the ATR, we actually need the risk a lot is 160 around. And then so in that case, if we would like to risk 100 only, we actually need to have that one lot here. So we basically just need around 0.63 lot here. And for the time being, I'm just calling it a raw lot because later on I will use a normalized. We need to normalize these volumes to avoid any issues. But for the time being, now we would like to simplify everything here. So I would like to package everything inside this function. So I would like to pass stop loss inside these functions. I would like to pass the risk here, risk amount, that is this $100 here. So that should be close to this one. Packaging, just integrating everything that we have here and back to the functions. So not here. Let's execute this. Sections, sizing, we have the stop loss, and we would like to take balance for groups. And here. Actually, I can very simplify this. Let's put some brackets for this one, but we should return this as and the return should be this one as well. Just return this number here. So excellent. Now we just repackage everything. These functions returns the lot size. Okay, so right now we have the raw lot here, which is the exact theoretical lot size based on our risk. But the problem is that the amplified might reject the audience if the lot size isn't rounded to the brokers allowed volume set. So that is why we need a normalizations here. So what we're doing is to add a normalized function. Let's normalize the we have the symbol, we have the volume, that is a warlock. Again, let's get the symbol information. We define the step. There's the tick movements, that's the minimum tick movement. And then we define the steps. So how much steps that we are having based on the difference between the ticks. And then we current is the steps. Steps. Decimal place here. So this so what we're doing here is that we first of all we just get information for this symbol, and then we get the volume step. This volume steps actually tells the minimum increments this allows, and then we divide by our devise the warlock and based on this step. So run it to the nearest integers so that we know how many steps that we are having. So based on these volume steps and based on our current lot, and then we times it back, so multiply it back to the step, and then so finally we run off to it decimal place to be safe. Now let's take a look on this example, and let's here we pass the let's say this lot, pass it to it, and then see what we have. Excellent. Now you can see it just comes to run off to decimal place or according to the step size that allows by the broker. And now we get a lot size that amplifiers will accept without any error. Now let's integrate both steps into the position sizes, because I don't like to keep too many functions. So we have the warlock here, and what we're going to do is to get the step size and then pass the warlock here to calculate the steps. Not close to the step times the step, round off to X decimal place, and then return the lot. Let's test a little bit this function. Let's use these examples again. We're using the econ, that information's sell scenario. Right now for this one, we are using the position sizing. That is the symbol, stop loss, and this amount. That's the value, the sales, everything. Okay. So now let's bring now and execute accordingly. And now you can see the volume here is 0.63 if we would like to put $100 only. So instead of 0.5 right now, we calculate based on how much that we are willing to risk. And this is the part for the short scenario. So this is for the short execution for this part. So now let's combine everything all together. Let's copy the values that we created before this one. This is the value. Here we go. And inside the short, we can set up a trade. Just like what we have inside the short. Inside all the code. And similarly, we can set up the execution for long. Long, basically they are the same. Long, basically they are the same. Except that we are we're buying it instead of selling it. So we go to buy. So similarly, here we're using the ask price for buying, and we calculate the stop loss based on the ATR, and then we calculate the target price as well, and based on the ATR. And then we use the position sizer that we just developed to calculate the lot, and then finally we execute the trade. We are using the buy, and here inside this value to remove this break. But what I'm going to do is simply, let's say, just simply say is running, maybe showing the latest price, you simply showing the latest price. So this way we just we can visually confirm that the algo is continuously updating trains the real prices. All right, here is the full picture setup. So we are tapping the full picture setup. Okay. We will just simply copy what we've done so far and fix lessons. And then in these lessons, we added 2 more functions. That is the position sizer and also the request and the open trade. So we will copy this open trade back to name. And then we need a position sizer. That's the position sizer. Position sizer. And then this is the entire setup here. So we initialize the 25 and initialize and put everything into the value. Excellent. This is a full picture. So now let's have a one quick recap that we've done so far throughout the lessons. So we start by importing all these essential libraries that we need. The amplifier for trading, the pandas and number types for handling the indicators and also the number, and also handling the data. And then we have the TA that is for the technical analysis for the indicators. And then we have the site ties that help us to detect the maximum, the maximus. And then we also have some OS system that allow us to read the file names in order for us to get symbol. And then we the first functions that we have is that we initialize the amplifier we would like to connect to the amplifier, and then we get symbol from the file, and then so we don't need to hard code what we're going to trade. And then in this lessons we go through the executions for the open trade and also the position sizer, and then we have the open and close for us to capture the latest data, and then we put everything inside this strategy for our RSI for setting up our RSI Hidden Divergence strategies. And then we initialize this amplifier, and then just like what I mentioned, we keep everything into these while loops in order for it to run 24/7. And then inside the main loop, we just get the data and then put the data into the strategy, and then we calculate the latest price, and then we check for the first layers of the conditions, and so we make sure that we don't have any positions or pending orders to avoid repeated trades, and then we check the few signals and another three additional layers, that is a EMA filter, also for hidden divergence, and then finally we also have a sanity check to make sure that we are not chasing the market. And then we just set up the risk reward ratios, and then calculates the lot based on the amount of risk, the dollar amounts that we willing to risk, and then we open the trade accordingly. And similarly, for this long scenario, we set up the same thing. And then finally, we price so that we know the algo is alive and updating continuously. So in other words, this loops constantly scans the market, confirm the signals with multiple layers of validations, and calculates the appropriately suggested position size and execute the trades automatically when conditions are correct. And all right, that's a wrap up. And we've gone through all 8 lessons together on building the RSI Hidden Divergence strategy for the algo trading. I really appreciate you sticking with me throughout every step of the process. Make sure to subscribe, like, and share. If you would like to get the full code, please feel free to join our YouTube members. Thanks again for following along. I will see you in the next Algo strategy.